Hey everyone, welcome back. For today's deep dive, we're tackling a company that a lot of you have been asking about, Comfort Systems USA. We've got two great sources for this one,
Mhm.
a recent financial analysis that looks really promising, and then the company's own Q4 2024 investor presentation, just to get a sense of how they see themselves. So the analyst we're looking at thinks the stock is like way undervalued, and they're
Wow.
seeing a potential 51% margin of safety, which is huge. To help us unpack all of this and figure out what's going on, we have our expert here.
Yeah, this is definitely an interesting one. I think Comfort Systems USA is kind of like this silent giant. A lot of folks haven't heard of them, but they're really tied into some of the biggest trends happening right now.
Okay, so before we get to that 51% margin of safety, let's back up a bit. For those of us who maybe haven't encountered this company before, what exactly does Comfort Systems USA do?
So they are a leading provider of MEP services. So that stands for mechanical, electrical, and plumbing. And that's basically like all the crucial systems that make buildings actually function right. And they're bringing in over $7 billion in revenue every year, mostly by focusing on these like really big industrial projects.
$7 billion. Wow, that's a lot of plumbing. But it's not just any type of industrial work that they do, right? I mean, their investor presentation really seems to highlight how much they're connected to the tech sector.
Yeah, absolutely. They're all in on the industries that are really pushing technology forward. So think data centers, semiconductor manufacturing, all that kind of stuff. Even life sciences facilities, all those super advanced labs, research centers that seem to be popping up everywhere. These sectors are absolutely booming. And Comfort Systems USA is right there with them, providing that essential infrastructure all these high-tech facilities need.
So they're not just installing pipes and wires, they're literally building the backbone for like all this incredible innovation going on. It kind of makes you wonder why they're supposedly so undervalued. But before we get into that, maybe we should talk about their financials a bit. The investor presentation is really proud of the fact that they've had 26 years of positive free cash flow now. For anyone listening who might not be a financial whiz, can you explain what free cash flow is and why it matters?
Sure. So free cash flow is basically the cash and company has left over after they've paid for all their operating expenses and their capital expenditures. So it's kind of like your take-home pay after you've paid all your bills and put some money aside for stuff like your car or home repairs.
Mm.
A strong and consistent free cash flow, like what Comfort Systems USA has,
Mm.
it usually suggests that a company is managing their money well, and it gives them that flexibility to invest in growth, pay dividends or even buy back their own stock. And they've also been increasing their dividend payouts for 13 years straight now.
So they're making money, they're sharing that money with their investors, and they're in a sector that seems to be on fire. It sounds like a pretty good recipe for success. So I'm still kind of hung up on this undervaluation thing. The analyst sees a 51% margin of safety. So can you break that down for us? Like, what does that mean, and how did they even come to that conclusion?
Yeah, so margin of safety is a concept that was made popular by Benjamin Graham, who's like a legendary investor. And it's essentially a buffer that you build in to account for the fact that like your calculations, no matter how good they are, can never be perfect,
Right.
right? So you kind of intentionally underestimate a company's value just to give yourself some wiggle room. In this case, what the analyst is saying is that even if their calculations are off by quite a bit, Comfort Systems USA is still trading for way less than what they think it's actually worth.
Interesting. So what makes them think that Comfort Systems is worth so much more than its current share price? Did they find like a secret gold mine hidden in their financial statements or something?
Not exactly a gold mine, but their analysis does point to some really strong financial health. One thing that really jumped out to me was their debt to EBITDA ratio. It's incredibly low, only 0.08. Now, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a way to measure a company's core operating profitability. So a low debt to EBITDA ratio like we're seeing here tells us that the company has very little debt compared to its earnings power. It's kind of like having a tiny mortgage on a giant mansion. It's a really good sign of financial strength.
And they've got almost $550 million in cash just sitting there and basically no debt to speak of. It doesn't sound like they're struggling to make ends meet.